Okay, good afternoon, everyone. Today we're going to continue our discussion on portfolio optimization, portfolio analytics. So we started last time with loading the most important packages that we're going to use. Uh, the most important ones for today will be quant mode, performance analytics, portfolio analytics, and the QMAO. So make sure that your packages are loaded. So let me just, maybe I'll just include here QMAO, the quant mode add-on. Okay, and then I'm going to load, I just um, load this. Okay, so it's all loaded. I hope you have the QMAO loaded in your machines, in your computers. All right. What we have done so far, class, was to load data coming from Yahoo Finance, making use of several functions, but mostly from, of course, we were using the get symbols function. And uh, what we did last time was to create a list of adjusted prices. And then from that, we created another list of prices. So we learned how to use the lapply, and then we learned also how to use the do that call. In particular, the function is merge. Okay. So today we're going to do another. Let's review what we did last time. Okay, we're going to use the QMAO package in order to get uh, either the prices or the returns. Okay, so let's make sure that we have already loaded our quant mode add-on package a while ago. So just to summarize, class, okay, so what we need is to define what are the stocks, our assets we're going to download. So we used last time IBM, this is Bank of America, Wells Fargo, American Express, the Tower, which is Tower, sorry, the Pfizer, and this is a semiconductor. Okay, I think it's Tower. All right, then we define the start date and the end date. Now, what's good about this, defining first your parameters, is that uh, you can now use the name pickers, start, end. And if you change this later on, you just change this. Just change this, and automatically, if you run the other code chunks, it will adjust already. So that's what's good with this. Okay, so uh, maybe I'll request you to create this code chunk, and then, so let's put all of this in one place. Okay, so put it under the QMAO package. Okay, so I'll give you a few seconds. Although if you have, you might you might have already these objects already with you, but maybe let's just for purposes of practice, let's just create this again, and then you can run it. So I'll run it. I don't have these objects here now, so I erased it a while ago. I'm going to run it now. Okay, so you can see now what was created are all vectors. A vector of this character and character start, and a character vector of the names that we inputted last time. Okay. Any questions so far? Are we clear?
Yes, sir.
Okay. All right. So may nag-chat lang. Okay, thank you. Okay, now what we're going to do is we're going to use the function from quant mode, okay, the QMAO, which is make price frame, or you can make use of the PF. Make price frame and the PF functions are the same, okay? But before we can use them, we have to define the objects that we're going to create a price frame of. So we have to first run this. Okay, we have to run this get symbols before you can run the make price frame. Okay, this will not run, class. This will not run unless you first define unless you have first loaded the objects. So you have first to load get symbols. Okay, so let me separate this. I'm going to create another object, another code chunk, and then I'm going to, okay, delete this, Control X, and put this here. Okay, so what I'm saying is that you cannot run this separately. This one, the make price frame, unless you have run this get symbols. Okay, so let me just delete this comment. Okay, so let me run this first. And you know, the get symbols function will allow us to load whatever assets we have defined. Okay, so here it's get symbols, and then R will understand what tickers is, start date and end date, and then its daily prices, and auto.assign is equal to true. Okay, so running this class, which I'm sure and I hope you already know, because we have done this since the beginning of the term. All right, so we now have, this will now create, okay, so you can see now, get symbols, stickers. This now creates 6 XS objects: American Express, Bank of America, IBM, Pfizer, the Tower Semiconductor, and then the Wells Fargo. Okay. Now, you know, class, that this is these are XTS objects, and they contain the open, high, low, close. If, for example, I open OHLC here, I open, this is American Express, so open, high, low, close, volume, and adjusted. Now, what I want, because we're moving towards the creation of a portfolio where we only have the either the closing prices or the adjusted prices of each of the asset, then I'm going to make use of this function called make price frame. Okay, make price frame. We define the function as, so this is the name of the function. This is from QMAO. Okay, so this is not from quant mode, but rather this is from the quant mode add-ons package. So the function is make price frame. Then we define the tickers, the start, the end, and then what do we prefer? The adjusted price. Okay, na.omit is equal to true if there are missing values, and then silent is equal to true. This is just the same as the it's similar in a sense to the auto.assign. Okay, so what do we expect here? Having already these several objects, okay, we can now create an object called PF. Okay, you can name it any way you want. And then it will only contain the adjusted prices of all this, of all the objects here that come under tickers. Okay, so if I run this, I run this code chunk, and I now have this object called price frame there. Okay, and it contains the adjusted prices for all of these assets here. Okay, so it's quite, it's, of course, you can use the lapply, but for me, this is really convenient once you initiate the get symbols. Okay, and then you can now use the make price frame. Okay, so let me pause for a while. Are there any questions? Is it clear so far? Would you kindly chat? Yes, class, if clear so far, my pace is okay. Okay, thank you. Okay, appreciate everyone, your feedback. Good. Okay, good. Okay. All right, there's another way, class. Another way is this one. So I'm going to delete this already, class, because this has been run. This one, PF. Okay, so it's an abbreviated form of the make price frame. It's similar, class. Same thing. Let me just put this. So same function. Okay, same function, but we use this PF. Okay, so instead of the make price frame. So I'm creating this object PF1. Okay, and this will run because already these stickers have already been loaded. Okay, so this function will run. So if you don't have this yet, I'm going to give you a few seconds to run this. Okay, but I think I gave this last time, but anyway, for those of you who weren't able to get it. So to differentiate it from the PF object that we created a while ago, let's just create PF1 and then let's view it. Okay, and then please in our chat box, comparing PF1 and PF, do we get the same data set? Okay, please chat yes if they're the same, which means that we can either use the make price frame or the PF function, and they will generate the same values. Okay, good, thank you. All right. Okay, so we have learned two functionalities of coming from QMAO. As I suggested last time, please go to the QMAO site and then take a look at the functions that's available in that site, because they are really helpful. Okay, it actually reinforces what's already available in quant mode. All right, now actually instead of downloading the price frame, we can just go directly to the return frame. Okay, so for example, you don't need to download the model that you're creating is really for returns. So if you feel that you don't need to download the stock prices, then you can go directly to make return frame. Okay, because what this will do is that it will now, instead of downloading the prices, it will automatically, create the returns, okay, depending on the type of return. So it can be discrete or simple returns, or it can be log returns or the continuous returns. Okay, so I'll give you a few seconds to write this, or you can just copy the one above and then change it. Instead of make price frame, make it make return frame. The syntax is exactly the same. Okay, so except for the fact that you're including here a type, because you're computing for the return. So we need to tell the package what type of return we want. Okay, so let's if you're done, class, let's run this. Control. Okay, I'll just anywhere in this. I can put it in the middle class. No? So and then Control Enter, and it will generate now this object RF. Okay, so let me view RF here. View RF. So we expect that RF should have a missing value there. Okay? Kasi walang prior value to eh. So if we want automatically that the missing value be removed, okay, let's check class kung pwede ito, no? NA.omit. So will this run, class? Anong kulang dito? So it's telling us, class, that it's an X, no? So anong kulang sa kanya? Anyone? If I put here NA.omit, okay, and it gives us an X here. So what's the error here? Halos same lang. Okay, pero tinan mo, Gab, nasasabi dito, nag-error siya dito sa akin. So anong mali dito?
Sir, parang same lang siya sa part ko.
What do you mean by same?
Hindi ko rin
Did you
makita
run
yung
this?
error po.
Did you
Yes,
run
sir. Yes,
this?
sir.
Okay, so
Yes, sir.
nawala na error sa akin kanina, no? The comment was wrong kasi sabi unnamed match daw dun sa beginning parenthesis. Eh, dalawa naman, 1, 2, 2 parentheses, and then 2 parentheses here. So tama to, no? So if I run this, and then, okay, I view this. Okay, what happened, class? Nawala na yung ano, no? Nawala yung missing value. Okay, so you can append the na.omit there, class. And what it will do is, if there are any NAs, then it will remove that. So no need for this one, but you can, of course, remove that NA there and then run this and then remove the missing value. Okay, so let me just delete this because I already placed here the na.omit. Okay, again, class reminder, this will not run unless we have run first the get symbols, unless we have loaded the assets. Okay, but will this run without the make price frame? Yes, this is independent, class. So as I was saying a while ago, it's you can still run this without running the make price frame or the PF function. Or similarly, class, just like the PF function above for the price frame, we can, I'll just delete this. We can also use the RF function. RF for the return. So let me just put this, let me fix the type so that it looks easily understandable. Okay, then here, class, okay, nag-na.omit na ako dito, no? Okay, now you notice, class, here, I placed here the na.omit is equal to true. However, I'm not sure why a while ago, it did not run, no? This was not run. Kasi may NA pa rin eh. So, I'm really quite surprised with that, no? Kasi this should be okay. Okay, so let me just see. Let me experiment. I'm going to create this, and then I'm going to remove this na.omit. na.omit, and then I have to delete this. There's already this na.omit is equal to true. So if I generate, okay, I'll put here rf2. So I'm creating this object rf2. I'm using the make return frame function, and a.omit is equal to true. Okay, so if I run this and print rf2 there, okay, so this is the problem. It seems that the na.omit was not followed or was not run. So I still have to investigate why this is so. Okay, but in the meantime, I'll just put here na.omit. Okay, and since this is not working, I can just delete this one. Okay, so let me just rerun this, and my rf2 will now be minus the missing value. Okay, let me pause for a while and ask you for your comments. If so far we're clear, are you able to follow along? Am I going too fast? Okay, so once again, request for your feedback. Okay, are we okay so far? Yeah, thank you. Okay, good. Thank you so much. All right. So, okay, no questions. Good. All right, so same thing here. Let's see if this will run. Okay, So I'll go back to our original. I'll just make this RF again, RF, and then RF. Return frame, okay. And then this one, RF1. Okay, let's test if this one will, okay, let me remove this and view RF1. So again here, it's na.omit. So let's see if indeed when it generates the printout of RF1, if it will remove the missing value. So first line, run. Okay, let's see. Okay, unfortunately, it does not. No, I haven't really checked. I didn't notice that the missing value was still there despite this na.omit. But let's just let me just put here na.omit. Okay, na.omit, and then close this. There. Okay, nag-exponential. Run this. Okay, wala namang problem. Yan. Okay. Returns are okay. Are they the same? 0.027117? Yeah, they're exactly the same. Okay. All right. So let's now go to what we have done so far was to compute for the individual stock returns. Okay, the RF1 XTS object that we generated, or the RF object that we generated, consists of the daily returns for each of the individual assets. Okay, now for portfolio returns, okay, when we're dealing with portfolio, to compute for the, okay, so let me just, so what's the formula for portfolio returns? Anyone? Have you learned this in your prior subjects? I think in financial management, this was discussed. The returns of a portfolio. Can anyone tell me, class? What is the formula for the return of a portfolio? Anyone? So if I create an object called R sub P, this is the return of the portfolio. Okay. So what's the formula for the return of a portfolio? Can anyone suggest? Can anyone tell me? Class? Anyone, please? In a while, we're just going to, let's say, get the two assets here. Okay. So if I have this returns of IBM and Bank of America for the whole period, how do we compute for the returns of a portfolio of two? Okay, so Eliza, kindly share your answer to everyone. Yes, Eliza.
Sir, wait, sorry, I was wrong pala. Is it ending value minus beginning value, then um divide by beginning value? Parang wrong yata. Pero
Ending
ending
value,
minus beginning value
price at time t minus 1 over.
over beginning value.
Okay, so what's this class? By now we should know what this is. Class, what's this? Hello, class, what's this? What's this formula? Class, ano to?
Rate of return po.
Yeah, this is just the periodic return. If T is daily, then daily return to. In fact, this is your discrete returns, di ba? Discrete to it. This is just the same as your, if we simplify this, okay, what's P sub T? Sorry, that this is the beginning value, no? So it should be P sub T over P sub T minus 1, right? Kasi dinivide natin yung P sub T minus 1. So this is just your discrete return, or discrete daily return, or this is your daily rate of change. Okay, and it's for the single asset. It's for a single asset. Okay, so but when we're dealing with portfolios, class, let me just delete first the drawing. Okay, the return of a portfolio is equal to ano lang yan, class, summation ng, or you might see others write it this way. Okay, I ranges from 1 up to whatever the number of observations. So this is the weight of each asset multiplied by the return of each asset. Okay, so here we have an XS object. This is the return of IBM and return of Bank of America for this specific date, no? On January 3, 2018. Okay, so if you're going to consider this as a portfolio, so you have a IBM and Bank of America stock, what will be the return of your portfolio on January 3? Now let's assume that our portfolio is equally weighted, which means 50% yung weight ng IBM natin, 50% yung weight ng Bank of America. So you just follow this formula. It's just the sum of the weight of IBM multiplied by its return plus the sum of Bank of America multiplied by its return. So that will be the return of a portfolio on, this is on a specific date, no? On January 3, it will be equal to the weight of IBM, which is 50%, times its return on that date, but that's 0.027, okay? I just rounded it off, plus 50% for the Bank of America multiplied by the return is negative 0.00, negative 0.00335 something. Okay, there. So if you have the portfolio, if you have a portfolio of IBM and Bank of America for that specific date, then the return of the portfolio is this one. Okay, and then you'll have a return on the following day. Okay, so ganun din class in formula. 50% times this one, 50% times this one. So this is what the formula is all about. The weight of the asset multiplied by the return of the asset. And then we sum up everything. Okay, so dito for day 1, meron tayong weighted average, no, ng return sila. For day 2, meron din tayo. For day 3, meron din. For day 4. So we have individual returns, okay, of the portfolio on a daily basis. And then everything there, class, everything there, we sum them up, okay, to get the return of the portfolio for this specific period from January 1, 2018 until December 31, 2023. Okay, pause muna ako, class. Are there any questions about that? Is that clear? Feedback, please, if that discussion is clear about portfolio returns. Yeah, thank you, Francis. You're correct. Discrete returns, no? Yeah, thank you. Sorry, I failed to acknowledge your answer a while ago. Yeah, tapos actually sinabi na ni Elisha yung tamang answer. Weight of each asset multiplied by the expected return or historical return. Okay, good. So hopefully clear tayo, no? So let's continue, class. We have defined what the return of a portfolio is. So first, okay, I will not give this code to you, class. I want you to type this on your own. Let's create a portfolio of IBM and BAC. So if you take a look at saan yung object natin? Yung ano natin, yung return frame, no? This is our return frame. Okay. So what we're going to use is the return frame. We're not going to use the price frame class because in portfolio optimization, what we're analyzing is the return of the portfolio. Okay, so we're going to subset IBM and BAC. And I'm sure you know how to do that, class. So I'm creating this object called port1, portfolio 1, and then I'm subsetting the return frame, okay? And then I'm going to use all the rows. So the blank here means all the rows, and then just the first and the second column. And then please view your portfolio 1. And then kindly share in the chat box and tell me, what do you get? What is portfolio 1 object? What is portfolio 1 object, class? Okay, yeah. XTS, yeah, you're correct. XTS containing what, Gab? Thank you, Rain Ann. XTS object consisting of what? Yeah, yeah, thank you, Josefa. The returns of IBM and BAC. Okay, we just subsetted this. Okay, this is our RF object, and we're just getting the two. So we're creating a portfolio of two assets first to simplify our discussion. All right, so now we're now going to compute for the return of the portfolio, assuming there's a 50-50 share between IBM and BAC. Okay, so let me show you now the function. Okay, let me just put this here. Okay, so we're creating this object port1 ret. Port1 ret. All right. So port1 is our IBM and the Bank of America XS object of returns. And then we're going to make use of the performance analytics. Okay. The performance analytics function contain many functionalities, both for individual assets and portfolio assets. Okay. So the function is return that portfolio. Okay. So this is the function return that portfolio. And then what portfolio? It's port1, the one that we just created. And then we identify the weight. It's 0.5, 0.5. There are two assets, so we need to put here two weights, 0.5 and 0.5. Okay? And then kindly run this and tell me what object do we generate? What is port1 rest? Does it contain many observations? Okay. One column, okay, thank you. It's an XS object. Thank you, Eliza. One column, and this column class is what? What is this one column? Okay, the portfolio returns. Yes, thank you, Rain Ann. Thank you, Eliza. You're correct. These are the portfolio returns. So let me, okay, run this. And ang sabi dito, error. Sorry. Port1 not found. Hindi ko pa kasi nararan to. Okay, so I forgot to run this. Let me run this first. Okay, so I now have this port1. Okay, and then while here, class, while here, I'm going to copy this. Control C, Control V. Oops. Okay. And then this one class, I'm going to multiply it by 0.5. 0.5 times the return of IBM, and then plus 0.5, 50% times the return of Bank of America. Okay? So 0.5 times the return of IBM on that specific date, January 3, plus 0.5 times the return of Bank of America on that specific date. Control Enter. Okay, I'm getting 0.1188. Now let me check if that's the object yun. What did I create a while ago? So I haven't run this. This one. Okay, port 1 ret. I'm going to run this now. Okay, and then port 1 ret. The first day is, this is 2 decimal places, 1, 2. So that's 0.0118831, which is exactly the same as 0.0118831. Okay, did you get it, class? Did you get what was being done by the function? Uh, I'll answer your question, Gab, sandali lang ha. Did you get this, class? Is it 1.11, 1.11835? Okay, 10 to the negative 2, which means you move 2 decimal places to the left, and it's exactly the same as this one. Okay, thank you. I hope you got it, class, no? Gab, anong question mo? To plot what? To plot what do you want plotted? The returns of the returns, the portfolio returns. O kasi may object na naman tayong port 100, the most basic is ito. Plot natin, plot port 1 ret. Diba? And of course there are better ways to do this, pero we'll go to that later on. Let me plot it here. So ang question ni Gab, paano ipa-plot yung di-plot lang. That's the default plot. As I was saying, there are other port 1 ret. Okay. So i-plot natin. Ayaw nyo dito i-plot. Lakihan ko lang dito. No? Okay. Okay, so this is the plot of the time series. This is the portfolio return. And you can see here, start ng COVID to, no? You can see here, volatility clustering. Yan. So, if you recall, those of you who were my students in FINLYTS before, this calls for a GARCH modeling. Hindi kakayanin ng ARIMA modeling to because of these volatility clusters and also in other areas. All right, so sige, thank you, Gab, for your question. So let's go now to, okay. All right. Now, there's such a thing as rebalancing. I'm not sure if you discussed this in your prior investment analysis subject. Okay, let me share with you in the notes. Kindly copy this na lang para mas mabilis tayo. Okay, this is just notes about what we call rebalancing. Okay, so let's briefly read what this is, and I gave here, there's a good discussion, very basic discussion in Investopedia, so madali maintindihan. So ano ba ibig sabihin ng ano, what does rebalancing mean? Okay, so as I mentioned here, process siya, it's a process of returning the values of a portfolio's asset allocations, okay, to the levels defined by an investment plan. So for example, you would want your portfolio to contain 50%, let's say, of bonds, 50% of stocks. Okay. However, every day or we know that prices change. So it's very possible that the value of your stock goes up and the value of your bond, maybe it remains the same, or yeah, usually it remains the same. Okay, or maybe goes down. It can go down also. So what will happen now? If you compute for the weight of your stock vis-a-vis your bonds, then what will happen is that you will now have a imbalance. So siguro because of the appreciation of your stocks, then mas malaki na yung weight ng stocks nyo. Okay, so as I said here, over time, asset allocations can change because of market performance. Okay, so rebalancing, which means buying or selling the assets of your portfolio regularly in order to maintain the desired level of asset allocation. However, class, if you're going to buy or sell assets to maintain your let's say optimal balance, this can be an expensive proposition kasi syempre pag bibili ka o magbebenta ka, may cost component 'yon. Okay, merong transactional fees, may tax, etc. So you don't do this of course daily, no? Sometimes ang ginagawa dito every 6 months nagre-rebalance. Yung iba yung medyo matatapang every month, no? Every quarter. Yung iba naman every year. So for example, may example tayo dito, no? Portfolio with an original target allocation of 50-50. Now, as I said, the stock's price rose during a certain period of time. So yung value niya will increase. So baka at the time of reckoning, 70% na yung weight ng asset natin sa portfolio, 30% na lang yung sa bonds. So anong gagawin? To bring it back to the original, to what you want, no? Na 50-50, then magbebenta ka ng stocks and then magbibili ka ng bonds for realignment. Okay? So ito in principle lang natin i-discuss to class, no? Kasi this is not really a topic on investment, but I want you to be aware of such rebalancing. Okay, so ganitong gawin natin, ano? Let's create this object. Okay, lagay ko dito, ano? Para okay. So I'm going to use the function return that portfolio. Okay, pareho lang, no? Pareho lang din. Kaso gagawa natin ng rebalancing. Okay? Of course, sabi nga natin, class, for all intents and purposes, walang nagre-rebalance ng daily. Okay? Kasi unang-una, yung fluctuation ng price might not be significant, no? Kung one day lang naman yung change ng value, it might not be that significant. And also, it's quite expensive, no? Kasi in buying and selling, may transactional fees yan. Okay? So let's make it rebalancing on months, and then let's now create this object. Okay. Sige nga class, create this object, and then try to see, may clue ako months, saan, okay, saan nagbabago, saan yung difference class. If rebalancing is on a monthly basis, saan most probably magbabago yung return. Okay, I'll give you a few seconds, class, to run this. wait for your comments, feedback, class, on what happened to your code on this port 1 rep rebalance. Okay, I see some answers here. Changes every month. Thank you. Okay. Okay, share your answer mo sa amin. What do you mean by every month? Okay, pakishare yung answer mo sa class, please. Okay, how about the others, class? What are you getting? Hello, hello, everyone. Waiting for your feedback.
Sir, could you repeat the question po?
Ano nangyari sa ano? How would you compare yung port 1 return rebalance at saka port 1 rep? Anong difference sila?
Sir, for me naman po, yung port 1 ret was showing up as like, 0.0118, blah, blah, blah. Then, yung port 1 ret rebalance was showing, 1.188 naman po with the E minus 02 sa end.
So pareho lang yun.
Yes po, sir.
It's the same. So, anong conclusion natin, class? Gab, anong sabi mo dito? What do you mean by this? Gab, what do you mean by that?
Sir, like, parang yung pagkakaiba ng figures sa January, parang halos same lang sila, pero February onwards, they're a bit, they're different kasi.
Nagbago na, February onwards.
Yes, yes, yes.
Okay, sige, let's do this. I'll give you a few seconds. Create nga tayo ng object ng ano. Okay, here. Compare natin, class, yung port 1 ret and port 1 ret rebalance. Let's start with, gawin natin ano. Sabihin natin from January 25 until February, make it February 10. Sige. So yung last days ng January at saka earlier days ng ano ng February. Okay, so what I want you to do is I want you to create an object called R1, okay? So yung R1 yung sa portrait yung hindi rebalance, no? From January 25 until February 2. Tapos sa R2 din, same period. And then i-combine natin, no, para mas maganda yung mas makikita natin comparison. So sige, so create this object R1. Ang date muna is from 2018, January 25, hanggang 2018 din, February 10. Okay. Just a few days at the end of January and a few days at the beginning of February. So create tayo, R1 minus, so R2 din, at minus, tapos combine natin sila, R3. Right? Okay, class, I'll give you a few seconds. Of course, class, alam naman natin na port 1 ret, no? Ito naman, port 1 ret rebalance. Okay. And then, i-combine natin ito. Para lang makita natin yung movement, no? Okay? What do you suggest here, class? Paano natin i-filter natin, class? How do we filter? Ano ginagamit natin, class, na before filtering? What do I put here? Class, let's go. What do I put here? Paano mag-filter, class? Paano mag-subset? Anyone, please? How do you subset? Di ba, brackets lang. Yan. Okay, brackets din to. Paano natin isa-subset, class? So subset natin, okay, we're running out of time. So isa-subset natin si 20, okay, so tricky to, no? 2018, 01, 25. Okay? Now, hindi pag colon class, it doesn't work that way sa XPS. So 2018, and then 02, 10. Okay, so we can copy this here also. Let's see. Okay, 2018, 01, 25 until 2018, 02, 10. So let's run this. Okay, so si R1, yun. 01, 25 hanggang, so walang February 10, hanggang February 9. Siguro Saturday yung February 10. Also for R2, I mean, port 1 rep rebalance, port 1 rep rebalance. Ito pa ba naran ito? Hindi ko pa naran. Okay, so let me run this. Okay. So after that, I'm going to run this. So meron na akong okay. Meron na akong subset. Same dates, 125 up to February 9. And then for easier comparison, just close some of these. Okay. Let's column bind them, R1, and then R2, and then let's print R3. Okay, so I'm combining R1 and R2, and then having it printed, Control Enter. All right, so let's take a look at this. Maybe, let's see if this will work. No? Masyadong maano. I-round ko nga into ano, round at least into 5 decimal places. Okay. Okay. Kasi hindi masyadong kita. No? Okay, one more. I'm going to make it lang, 7 para mas kita. Okay. Okay, so we can see here that, okay, nung January 25, pareho lang yun, 26, 29, kasi walang trading ng 27, 29, 30 pareho, 31 pareho. And then, after that 1 month, ano nangyari? Nagkaroon ng rebalancing dito kay portfolio returns. Dito kay R2, no? Ito. Okay. I could have renamed this. No, huwag na. So, February 1, magkaiba na. Okay. And then, what happened? February 2, pareho na naman. Nagkataon na pareho, 189,858, 189, hindi, magkaiba. No? Okay, kasi magka-carry forward na yan, class. No? Okay, and then February 5, iba na. So, magkapareho lang sila nung buong month ng January. And then from then on, iba na. No? And then magre-rebalance naman siya at end of the February. Okay? So, they will be similar only in the first month. At the end of the first month, magre-rebalancing siya. Ibig sabihin, babaguhin yung composition ng assets nila. Kasi most probably, nung January 31, iba na yung weight ni IBM, iba na yung weight ni Bank of America, hindi na 50-50. Okay, so sa February 1, ibabalik siya sa ganung weight. So, magkakaiba na ng returns, no? Okay. Questions, class? Clear to? We can see here that nagbago na siya on February 1. Okay. So, and then this will carry on forward, no? Magkaiba pa rin sila from February 1 onwards. Sa March na naman, magkakaroon na naman na rebalancing ito. So let's check, class. No? So, gawin natin itong February 25 hanggang, palitan lang natin month, no? March. So, gawin natin February 25 hanggang March 10. Okay. Same thing pa rin lahat, no? Everything will be the same. I just changed the month. February 25 hanggang March 10. If I run everything here, okay. So, you notice, class, na sa February 26, iba na yun. Iba. March, iba. Tapos, March 1, iba pa rin yan. So, everything will be different since from February moving on forward. Okay. All right, so that's rebalancing. Of course, ang magandang tanungin, which is better kung rebalance to, rebalance. All right, so let's do this, class. Let's create this object. Okay, I want you to write this comparison of rebalance and non-rebalance portfolio. Okay, so I'm creating this object, all portfolio 1 returns. So isi-bind ko si port 1 ret tsaka si port 1 ret rebalance. So lahat, no? Everything. And then port 1 ret is non-rebalance. Port 1 ret rebalance is monthly rebalance. I'm going to change the column names. So column names ng all port 1 ret is non-rebalance and then monthly rebalance. So let's run this. I'm going to run this. I'm going to give you a few seconds. Can you run that? I will now have this all portrait. Okay, please tell me if you have done this. And then gagawa natin ng annualized returns. No? So this function is also from performance analytics. Then table that table that annualized returns. So okay, so this is from performance analytics. Yung table that annualized returns. Okay, kung gusto nyo, para again, dito na coming from performance analytics to. All right. So what am I doing here, class? I'm creating a table of annualized returns. Annualized returns to, okay, of this object, all port 1 rep, which consists of yung all port rep 1 natin, it consists of yung non-rebalance ito, di ba? At saka yung monthly rebalance. So two different returns. One is just the usual. Okay, walang rebalance yung ginagawa. Ito naman, every month, nagre-rebalance. Alright, then let's compare annualized returns nila. So, sa annualized returns class, kailangan yung risk-free rate. Okay? So, we need to identify the risk-free rate. So, RF. RF. Risk-free rate in the same period as your returns. Alright, our returns is daily, di ba? So let's just assume that the risk-free rate is 6%. I'm just assuming this. So the 6% is, this is monthly, no? Sorry, annual to. So dapat gawin natin daily kasi yung mga returns natin is a daily return. So I'm dividing this by 252, which is the number of trading days per year. Okay, so the risk-free rate R sub F should be the same period as our data. Our data, all portrait is daily. Therefore, the risk-free rate should also be daily. All right, so it's almost time, class. Let me just end this. If I run this code chunk, this one, this portion of the code chunk, okay, you can see here the results. Huh? Okay, my annualized return data. Okay, so this, okay, tingnan ko nga kung ano, I'll call this tab 1. Let's see if this will, anong object ang mag-create nito. Tab 1, and what's tab 1? Tab 1 is, okay. So it's just like a matrix, no? So ito yung tab 1 nating class. Annualized return, annualized standard deviation, and your Sharpe ratio. So just compare. Tab 1. Tab 1. Okay, here, class. Now, in terms of annualized returns, si non-rebalance 0.0096. Tapos si monthly rebalance 0.0185. So you can see here that the monthly rebalance fared better. No? than the non-rebalance. Mas malaki yung annualized return niya. Tapos in terms of risk, mas mas mababa ng konti yung monthly rebalance. And then in terms of Sharpe ratio, okay, which is just the ratio of your excess returns over your and Sharpe ratio natin, ano? Excess returns over the portfolio standard deviation. It's negative kasi mas mababa yung portfolio returns natin compared to the risk-free rate. Okay? So mas mababa class yung mas mababa yung risk-free rate, yung Sharpe ratio ni non-rebalance kasi negative to eh. No? Negative 0.8 and ito negative 0.15. So from all accounts, mas mataas yung annualized return ni monthly rebalance, mas less risky siya. Tapos yung Sharpe ratio niya, mas technically class, mas maliit na negative, so mas mataas siya. But of course, pareho silang negative. Okay, so yun yung tatlong parameters here. Annualized return, annualized standard deviation. I think I should have parang, okay, next meeting class, ayusin natin tong risk-free rate na to kasi 6%. Okay, I think I will have to adjust this. Okay, anyway, sige, next meeting na lang. Okay, so with that class, I hope next meeting we're going to, okay, let me just share with you this last class, itong formula ng Sharpe ratio. Ano na lang, okay, so this is text lang yun. And a note here. Note dito na latex natin. Okay, for next meeting class, we're going to continue this. This time, ano na tayo, no? Yung 6 assets natin, equally weighted pa rin. And then, we're going to now, yung yung portfolio optimization proper. Okay? So, on Tuesday, no? On Tuesday time. Okay? All right, so thank you so much, class. I'll end our recording.